you very much.
Thank you very much.
All
Thank you.
right. Okay.
Have you?
Uh, Ladies and gentlemen, we are continuing, and right now I would share my screen because for those who came up a little bit later, um, I just want to repeat that one of the presentations was unfortunately withdrawn, so we decided to replace it with my presentation, which I prepared very quickly. And since the presentation was rejected, which was withdrawn, sorry, was about some trees for financial industry. So I decided to just tell you some words about my experience with trees in financial industry. So let me show you this presentation. I made it just this morning, so um, I want to excuse for the quality, but I hope it works. So just some glimpses from my personal experience. I often hear the questions, can trees be used in financial industry? Right, so let me go with it. Yes, so trees in financial industry. I want to do something at this moment. Okay, so let me go briefly through this presentation. Well, first of all, what is financial industry? Financial industry is rather big today. Well, here I just at this slide listed some most bright examples of financial industry systems and value propositions, from retail banking services to investment banking services. Also, insurance is a part of financial industry, stock exchanges, financial experts, all sorts of investors like hedge funds, like venture capitalists, angel networks, and so on. Today, we also see a lot of innovation in the payment systems and brokerage conglomerates. And also we have a rather big area of which requires innovation today, which is called fintech, right? Fintech innovation. But fintech, you can consider as a part of financial industry as well. Okay, well, lots of people ask me, well, where are examples of trees of in financial industry? Well, a good question would be, where are innovations in banking industry, even without trees? Once I had a coffee, well, actually, among my customers are a number of banks, and well, also training and consulting. And one of the vice presidents on operations of one of the biggest banks here in Holland, in the Netherlands, told me when we had a cup of coffee, well, Valeri, banks are too lazy to innovate. We have enough low-hanging fruit to prosper. And that's true. When you study just a general equation or an issue of innovation in banking industry, you will see that there are a lot of complaints that banks do not innovate. Nevertheless, there are also banks are not only representative of financial industry, although they are biggest ones, but there are some other companies, some other organizations which are engaged into finances. And I didn't have that many projects, but there were a number. And let's say one of the most, well, there are two ways, of course. There is training. I provided training quite a number of banks and financial companies. And second is, of course, solving specific problems. That's what you can do with trees. Eliminating negative effects, increasing efficiency, improving performance. Or also, one of the interesting problems is when the bank or some financial company organizations tries to introduce some new innovation or let's say new service, and it meets obstacles. And well, what is innovative problem? Well, here I have to do one remark, very important remark. When we speak about technology, then invention is rather clear. It's something that you can patent. In a business industry, well, here in Europe, we do not have business patents, business model patents, etc. So no business innovation can be patented. So uh, we are talking not about patentability as a criteria, but one of the features of a problem when we call it innovative is that once you have a problem, you do not know how to solve it. In your area or in your organization or in your domain, you do not have solutions to these problems, or you might have solutions, but these solutions cannot be implemented because of certain restrictions. So now you have to invent your solution. That's why we call these problems innovative. The next type of project is about radical cost cutting. Another type of project is invention of new services, because services are business products. And finally, business model innovation, which primarily leads to disruptive innovations. Um, about training, well, there is a company which is called ING. Maybe you heard about it. The ING is a group, financial group, which first was insurance company, but then the insurance company accumulated so much money that to control them, the government actually proposed to form a bank. So ING was split into ING Insurance and ING Bank. And currently there are about 20,000 people working with, no, as yeah, about 20,000 people working in the company. And this is, uh, please mute your microphones. Um, and this is, you see, the headquarters of the group in in Amsterdam, which is basically a huge ship. Very nice building. Little bit strange, awkward, I would say, but it's definitely exclusive. Well, and I did some training there and also had some little projects. But what I put here is that they have an innovation department, and I also trained some people from their innovation department. And when you enter the building and visit the innovation department of ING Group, you can see these posters hanging on the walls of the innovation department. So they know about TRIZ and they use TRIZ. Okay, next, I want to show you several short examples or cases uh, which illustrate different directions of applying TRIZ in the financial industry. Well, one of the first problems happened almost 30 years ago. We didn't have this beautiful process which you can see right now, and also this process was shown by Mrs. Um, Aline just during the previous presentation. Today, you see we have a 6-stage gate process where you have every part of the process supported by specific tools, which are either invented or adopted especially for business. So if you're talking about 40 inventive principles, that the current system, which we have, it's not the copy of technical 40 principles. It is written in business language. Um, and it contains more recommendations, about 190 recommendations, the whole system of 40 inventive principles. So basically, you can say we have 190 inventive principles in that. Okay, so how do we solve problems? We first analyze it, identify contradiction or barrier which prevents you from solving the problem, and then you apply inventive principles. But of course, there are some other tools, but in a basic process, we use inventive principles, obtain solutions, and then landscapes, analyze and landscape. But I won't show you the process, I'll just show you some examples. That was back, I think, in 1993 or 1994. In my homeland, I was born in Minsk, Belarus. In 1989, we established a company which is known as Invention Machine Corporation. That was a company which basically unrolled trees around the world. We developed software, which was the same title, Invention Machine. Then it became Tech Optimizer, and now you can find it under the name Goldfire. But it's not Invention Machine anymore. Invention Machine Corporation was sold back in 2013 to IHS. Today it's IHS Market. It's very well known United States technology information company. But anyway, what was happening at that time? 1990s were the wild era for former Soviet Union republics because they split and the economy of the whole country was destroyed. And there was a very high rate of inflation. And once people got their salaries in Belarusian rubles, they instantly converted them to American dollars just to save them. Because by next month, the inflation could be another 5–10%. It was really huge. And of course, when people wanted to do shopping, they went to currency exchange offices and exchanged their US dollars for Belarusian rubles and went for shopping. But there were plenty of these currency exchange offices around the city, which is 2 million people, so you can imagine. And they were not great for banks who operated these currency exchange offices, especially at night. Because at night, of course, level of shopping is much lower, but they still had to keep officers and keep these the officers and keep these locations open, which were quite increasing the costs. So we have a contradiction. A currency exchange office must be open at night so the customers could exchange their currency. And at the same time, the currency exchange office must be closed at night to save costs. And it was illegal to come to a shop or a store and purchase products with foreign currency. You could only pay with Russian ruble, Belarusian ruble. So that's a typical contradiction. And a typical way of solving it would be to find a compromise or an optimize. So let's say to keep the currency exchange offices open till 12 and they close them for 5–6 hours, open at 6, but it didn't much solve the problem because then the currency exchange shop would lose on conversion. So the solution was, of course, and a store like a supermarket may not exchange or accept foreign currency. So the solution was to use a resource. A resource was a supermarket. So there was an agreement that the supermarket becomes also includes the office for currency exchange. Why not? It was possible. And his currency exchange office was combined with a cashier, right? So when you want to buy something, you come to a store to the same person, but first you make an operation for exchange your currency, and then the second independent operation, which goes to different books, was purchasing your products. So this way, everything was absolutely legal, and even for the currency exchange officers didn't need to allocate their people to work at night at all, and the supermarkets were getting some extra profit for providing currency exchange operations. So that's how the problem was solved. Another problem was, I recalled it yesterday when we discussed a situation with presentation by Denis Petrov about Kazakhstan. A very similar story happened here, and when the banks wanted to expand their portfolio by retail, non-banking retail. But according to the regulations, they were not allowed to do this. So if a bank wants to sell the TVs, for example, TV sets or clothes, whatever, it may not do it because it's not banking retail. It doesn't belong to the category of banking retail. So the bank wants to sell something, but on the other hand, it's not allowed to get the money from the customers for purchasing non-bank related products. Well, that's also a very clear contradiction. A bank must provide non-banking retail services to expand its service portfolio and must not engage the non-banking retail B2C services due to state restrictions. But what usually do? What main product of the banks? The banks sell money. So the bank can sell money. So the idea was as follows, that rather than when a consumer wants to buy a TV set, for example, it's not really paying money for purchasing the TV. The banks gives a loan to the customer, and the customer uses this loan to purchase a TV set and pays back the loan to the bank. So in this way, the customer doesn't pay for TV set, but the customer pays pays his loan back. So I hope you get the idea. So again, everything is absolutely legal. Today, you might have the situation, for example, you can buy, of course, things by credit cards, but it's different. Then you deal with credit card companies, which are not banks. Or you can also come to a store and purchase something expensive by dealing with your bank directly through the store. But again, that was in the end of 90s. So this is how we deal with problems, and we can deal with lots of problems. I would say that any problem which faces contradiction could be resolved with TRIZ, almost virtually every problem. And it doesn't matter if it's from other financial industry or some other business service. Radical cost cutting. Well, I will not get into details. There is not too much time, but I will show you just how we do that. And I had one case with one of the big banks in Asia Pacific. In general, there are three scenarios how we can radically cut costs. Those who know classical trees, technical trees, you know that a major tool for cutting costs would be a function analysis. We are building a function model, and then we apply so-called trimming rules, right, which help us to cut costs by throwing components from your system while preserving the functions of their components and quality and performance of your system. So that would be first, if you have some product, for example, you have a coffee machine, you build a function model of coffee machine and then apply a system trimming rules. How do we do it in business? Well, a very similar approach. There are three scenarios. Another tool in technical trees, which is much less known, as I mentioned yesterday, it is called function analysis of processes. And we also have process trimming rules, which are not the same as system trimming rules. Oh, please, can you mute your microphones? Okay. Right. So we have three scenarios for business. First of all, we can directly try to cut costs of some business process. Well, in business, we do not use the process modeling framework from. We are using already existing process modeling frameworks. For example, BPMN. It's one of the most widespread modeling frameworks today. It has nothing to do with TRIZ, but we use it as a basis. So once we take a business process model, we can tag the operations within this process. We can tag it with TRIZ, you know, like sometimes we categorize different operations. For instance, there is a productive operation, right, which is produces something value, actually really produce value at the output. But there are supportive or there are transport operations which really do not produce anything. They need it to support these productive operations. So which means that these supportive, transporting, whatever operations could be trimmed, and we can get a result. However, a second approach is that once to even more effective than I would say cutting costs of the process directly with the process operations would be try to cut cost of the system which supports the process. In this case, we take again the process model, BPMN, for example. We build a function model of a system around it and apply the system trimming rules. And the third scenario, we have an organization, for example. Organizations has different departments, different groups, and so on. So we can pick up a specific group or department, then model all the functions in this department, and then apply system trimming rules to cut or trim the components of the department. In the example which I mentioned, we made analysis of the group, one of the groups of the department or of the bank, which was around 200 people, by the way. So that's called group, but it's really a department, but they used to call it group. and the operational costs were cut by 15% per year, which is, must say, not bad at all. It's not like 2 or 3%, which you would usually obtain when you do the classical optimization or compromise. So that's a way how we deal with radical cost cutting. And the final thing that I want to show you is a new service innovation. Well, new service innovation can be just within a certain S curve, or it can actually bring your business to a next X curve. Well, I guess you all know what I mean. Um, and there are two ways of bringing your system or your if you're talking about technical systems or business systems to S curve. First, that's the actually you leave the functions which the system has and replace the basic principles behind delivering these core functions. And usually when we speak about the growths of so-called MPVs, main parameters of value, or obtaining new M parameters of value, when you are talking about mostly technical systems, technical products. However, when you speak about the business systems, we have a one integral parameter for each business system, which is called market value, which makes it easier to evaluate the S-curve jumps and also to do benchmarking between different competing systems and so forth. So if you look at this slide, you see how the banks, it's a very rough picture, were evolving, not from the platform, right? So S-curve can be done by changing the platforms, how you do the business and operations. You see here, we are moving from different ways. We are changing paradigms from postal mails to phone messages to phone machine to electronic mail to e-messaging. So new S-curves emerge due paradigm change. Here, the new S-curves emerge during two core services change, from short-term loans to long-term loans to growth investments to investment banking to revolving loans, which brought us credit cards, and to complete financial packages which banks offer to their customers and consumers today. Right. So, here we have service innovation can be, again, like I said, within the same S-curve, like considerable performance increase, eliminating critical disadvantages and harmful effects, or considerable improvement or adding of new user experience, or creating a new S-curve, disruptive innovation, radically cut costs while preserving key values and functions, replacing the core principle behind service delivery, adding a new service to the existing service, and finally, creating a new blue ocean service, a service which has never been on the market yet. And to innovate new services for business, we have a tool. If you look here, you might recognize the trend to super system evolution of super system development. We applied it to services, and it seems like this is a perfect match. And the way of transition to super system, which was first discovered in technical TRIZ, is a perfect match with services. So we can use this way of evolution of services from monoservice to biservice to polyservice, and then even convolution or trimming of services, creating a back and go to bed new service. A very simple example to show you, to explain, let's imagine you're running a hotel business. So first you might have a monoservice. You just rent in one room or selling one room per night. Then you go to B-service, you're selling 2 rooms per night, but then you can increase the difference between the services you sell. Yeah, the 2 rooms can be identical, or it can be similar. Let's say the standard room and let's say luxury room. And so you can have competing services. For instance, you have hotels and you have hostels. So you can have 2 rooms, which one room is a normal hotel room, another room can be a hostel room. where you have like 15 beds and so on. But you also have polyfunctional services. When you bring together by using resources, the services which add together. So it's a room and breakfast now, you see. They are different services, but still they are adding each other. They are complementary services. There could be even inverse services, services which have a different function, right? And so on. Okay, okay, I will not get into details on that. So this is a nice tool. But, oh, yeah, but again, I wanted to tell you the story. Once I was helping with a rather small bank, but this is a kind of exclusive bank for luxury service, for a luxury segment. For example, to make an account in this bank, to open your account, you need to have at least at least 1 million euros to your account. And this is exclusive banks, which actually their main unique selling point is your personal service. So you are a customer of the bank, and they build their services around you, your personal requests, and it's customized service, let's say. And we also were trying to find a new service that bank could establish to attract new customers. And one of the new services, you know, that banks usually deal with real estate, like investment banking. So the idea was to add a new service, a free service for a customer, the analytics of real estate, and each of the customer of the bank can get a customized, personalized report, especially these people usually who put such amount of money, they usually are investing or they are actually looking for securities, and they, you know, that real estate is one of them. So they would provide their requirements. They would get their personalized analytical reports on the potential real estate that they could invest into. So then if you are, the biggest advantage of this was that if the bank does it, it does it completely independent. If you go to agent of any real estate agency, they have always, well, special interest. But in case of bank, it's completely independent. So that was the main difference of this point. All right, that's what I want to tell you very shortly about TRIZ and financial innovation. Well, it works. And let me see if we have some questions in the chat. Okay. There was a question about, you can see only a part of the screen. Was it okay? No, it's okay. All right. Now from Richard, dear Valerie, where would you place e-commerce? Since I see many conventional steps in Bank BD that may be overseen when entering the market. Well, e-commerce, it's exactly change of the business model. Because again, if you go to a normal store, you pay your 100 euros and you get your TV set. When I purchase online, I do exactly the same. I pay 100 euros and I get my TV set. What has changed? A business model changed. And a business model changed in the way of the delivery or a channel, selling channel. Rather than going to a store to buy my TV set, I buy it online. So the sales channel of business model changed. But other doesn't change for me, because I still spend the same 100 euros and I still get the same TV set. Another change of business model, which you can see quite aggressively in Wondel here today, is how do you call it? For instance, Amazon.com. It is that it's conglomerate sales. So they are not only sales from their own warehouse, right? They work with lots of other sellers and they bring it all together. So you can have a single purchase point. But still, what is the key advantage, competitive advantage? That they sell a huge number of goods from totally different suppliers. Okay, Richard, flagship store. Well, again, we have to consider two very big things. Like when you create a new value proposition, there is something very new, which has not been on the market yet, or you change the way you do your business. In this case, for a customer, in his pocket, in his systems of value, you actually act on not on the really, you're not really cutting cost or something, but you are creating a new experience. So rather than breaking my work and go into the store, moving, wasting time on that, I just do it in one click. So definitely there are big improvements of my customer consumer experience. But for otherwise, nothing changes for me. If I go to Amazon today, I could actually, and I want to have a tea from, let's say, Himalaya, which I cannot find in a store outside of my house, or I cannot find in my city. I go to Amazon, type Himalaya tea, and I get it in 5 days. Well, my Amazon.nl offers me, when I type tea, offers 200,000 products. That's a huge and big, of course, competitive advantage. All right. Okay. Well, I'm sorry. Thank you very much. It was a little bit of unexpected introduction to the agenda of today, and let us move to our new speaker, and